Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
I think you touched on an important point there. I think what we're seeing in our analysis is that the US is very much in a K-shaped economy. The top decile of earners, maybe top 20%, are flying it, and I think it's gonna the wealth effect from owning equities, as you pointed out, is really helping them. But then the bottom 20% of earners are in a real dire situation. We can see from our analysis that the lowest spending decile in McDonald's is really getting hit. You can see that in the company calls Chipotle. Had a big profit warning a couple of weeks ago, paying $16 for a wrap at lunchtime just isn't happening anymore. I think what was one of the interesting points we saw on we tend to put the restaurants and the dollar stores into our models just because they give a good indication. But on the fourth Friday, the Dollar Trees and the Dollar Halves and the Dollar Generals are seeing a complete fall off in spending. So basically, the lower decile in the US is living paycheck to paycheck. Last Friday in the month comes, there is just no cash left. So it is. Do you think that's the big danger we're seeing in markets? As long as the AI trend is still buzzing, the top decile are fine in their spending. But if that was to reverse, we think that could kind of show the inherent weakness that's under the surface of the US